Hey guys, GoldStreams here again. So I want to talk about a trade that I did today. So it's the 12th of February. Yeah, 12th of February. And yeah, we traded gold like every single day. So the market came in. It was on a downtrend, right? To be fair, sells looked ideal. That's why I haven't entered a buy here. So there was a couple of reasons that sort of stopped me from entering a buy on this 30-minute candle, the bullish close that created support. The first reason was the 4-hour time frame was bearish at this point. I was expecting the market to continue moving down. The 1-hour time frame was also bearish, had clean range to the left hand side. I was expecting the market to move down. So everything was sort of pointing to the downside. Also, we had, if you can look at the 30-minute candle that actually closed bullish on the support. So before the candle that's currently open, that wick to the top side, that was the 15-minute candle rejecting and closing a strong bearish candle. So we had a support, right, formed at 28.85. That was the trade to take. I completely missed it. Like I said, I didn't feel confident. And then we also had a resistance. Now, the resistance that we had was 28.89 that I've got marked out on there. Now, I've marked these supports and resistances on the 30-minute time frame. I didn't feel comfortable taking the trade when the 15-minute candle opened, okay? Because the second half of this 30-minute candle, right, it did make a lower wick and then continue up. But as you can see, gold is approaching the next resistance that was at 28.95. 28.95. So I didn't feel comfortable with it. I wanted to see what the 15-minute candle would do, right? This is the 4-hour open, like it is pre-London, right? So I wanted to see what gold would do and how gold would react. Ideally speaking, if the 15-minute candle could close back in the range, then we could potentially look at another fake out trade like we did yesterday using the 15-minute time frame. It didn't close back in the range. It closed outside of the range, which shows that the market could still bullish. Now we've got a massive wick to fill on the left-hand side that the 30-minute candle has left us. It's left us a wick of around 45 pips to fill. So once this 30-minute candle came down, it made a lower wick and it started coming back up and breaking its high. I'm expecting this candle to move up and continue bullish, right? But because there's a massive rejection, right? It's a wick to fill, BS, but it's a rejection wick. So the 15-minute came back down and closed bearish. I didn't enter this trade with full risk in mind. I had 1% risk in this trade, right? And I wanted to see sort of if it was to work out, it would have been good. As you can see, I would have made 1.8% on the account, right? If it didn't work out, I was willing to lose 1%. Okay, so you see that I'm measuring ranges. I'm trying to sort of find out exactly, if this trade makes sense. I'm looking through different time frames. And keep in mind, guys, if you don't see my mouse move on the screen, it is because I'm looking at different time frames on different screens, right? So I'm keeping an eye on the 15-minute, right? So the candles come down, it's made the bottom wick. The 30-minute candles come down, it's made the bottom wick. I'm expecting this candle now, because it came down, it made the bottom wick first, and then it broke its own high. I'm expecting it to continue bullish. Risk management is what saved me in this trade, like it always does. Risk management is absolutely key when you're trading. What I was expecting was this candle to keep moving up. If it didn't keep moving up and it came back down into the zone, right? So if it came back down, as you see it do now, back below the resistance that we had marked, right? I'm going to close 85%. Okay. Even though I'm only risking 1%, I've already managed risk on my entry. So I'm not using my normal 2% risk. Okay. I'm still managing risk as the trade is going on. There's no point of me losing a whole percent on my account. If I can lower that and lose 0.5%, then that's much better for me, right? So we're watching this move now. To be fair, I had quite high hopes. And as you can see there, the candle came back in the zone. I closed 85% and then full stop loss got hit at 21 pips, right? Now, at this point, I didn't rush to take another trade, okay? I still wanted to go with my original idea of the candle breaking its own high and continuing to fill that wick to the left hand side. The 15-minute candle broke the previous 15-minute candle low, right? But I was keeping an eye on the actual low of the previous 30-minute candle, as if that low was to be broken, then the 4-hour would flip bearish and the 1-hour candle would flip bearish, leaving a massive rejection wick to the top side. We got good range down to the bottom side as well. We had quite a healthy range for sales. I think it was around 70 pips, 68 pips to the downside. But that was the idea. So I had a trading idea. I looked for buys. I had quite a tight stop loss. I managed risk and I ended up losing literally 0.7%, right? I ended up losing 0.7%, which was fine. So I risked 1%. I lost 0.7% of the account. I'm keeping an eye now on this 30-minute candle, and I wanted to see it close, and I wanted to see it close one of two ways. Either below the resistance, so either see it close below 28.85 or see it close bullish with a small body, right? What actually happened, it was impulsive. So the next trade I took, because I took 2 trades today, the next trade I took, you're going to see it's an impulsive entry. And because you've been trading for some time, you're looking at charts constantly, you're studying this, you spend a lot of time in simulation. And so what happens is you just start to learn the way certain things happen. Okay. So once this candle actually ended up flipping bullish without the candle actually closing, the candle simply just flipped bullish. I gave my trade a second chance. But this time I used 1.3% risk. So I'm using my whole 2% risk for the day. Okay. I gave my trade 1.3% risk. I didn't put my stop loss at the bottom of the 30-minute candle, right? Because if this candle was to break its own high, it has no reason to come back in the zone. Okay. It has no reason to come back in the zone. Okay. So the stop loss went back in the zone. You're going to see here now, right? And the take profit was up there, expecting to get around 25, 30 pips out of this trade. Once the market started obviously moving, if this candle was to flip bearish, right? If this candle was to flip bearish again after breaking its own high, I would have closed another 85% of the trade and I would have ended my day with a 1.5% loss. That was the idea. So I risk 2%, but I always try and keep my loss as small as possible. I never use full stop loss. I never let my full stop loss get hit. It's fine. I've got a trading idea. I know what I expect the candle to do. If the candle doesn't do what I expect it to do, and if it doesn't move the way I expect it to move, then I just deem my trade as invalid and I cut my losses short. The goal is, if you want longevity in trading, you have to cut your losses short. Hold on to your winners, cut your losses short. Okay, so as the trade is moving there, as you can see, we took 26 pips out of this trade, ended up in 1.5% profit. It was a fantastic day. And coming back from a loss and then ending the day in the profit, very healthy. But yeah, thank you very much for watching. Hope you enjoyed the video and look forward to doing the next one with you guys.